All right, it looks like, make sure everything is running on my channel as well. All right, we're live. Hey everybody, welcome back to another live stream. And if you are tuning in for the first time here, welcome to the channel. Welcome. If you're watching on my YouTube channel, welcome. If you're watching over on Eightcap's platform, then welcome as well. We do this month. I've been doing a guest analyst role with Eightcap, which is a very well-known, very popular broker. And they've actually been having me on as a guest analyst. And each Monday for this month of October, we have been basically going through some setups once a week on Monday. And then we follow up on Wednesday with sort of an educational webinar and follow-up phase. So make sure to join us on Wednesday if you haven't already. All the information, by the way, if you're watching on my channel, to check out Eightcap will be linked down below in the description. So today, what are we going to do? Well, we're going to focus heavily on talking about some trade setups for the week ahead. Of course, Monday is my favorite day of the week to sort of set up for the week, if you will, because a lot of the moves are, a lot of big news events are going to come out in that Monday, Tuesday, Wednesday phase, with the occasional Friday. I think we don't have NFP this week, but we have NFP the following week. So sometimes you get those big Friday releases as well. But with that said, we have a couple requests today that I'm going to be taking, and hopefully we can jump through a bunch of different charts together. So we're going to be taking a look at the Dow Jones. We're going to look at gold. We're going to look at the NASDAQ. So we got a couple indices and commodities to take a look at here quickly today. So maybe we'll start with US 30, which of course, what I always like to look at when I'm thinking about US 30, right? I like to think about it as a way to sort of, sorry, I had to make sure my audio is okay. So we're good. What I always like to think about with the US 30 is it's a big risk on, risk off gauge. And what I mean by that is that when the stock market is rising, usually what you're going to see is a lot of other risk correlated assets also rise, right? So you might see actually things like gold might actually poke up, or in some cases you might see the Australian dollar or the Canadian dollar or the New Zealand dollar, some of those higher risk, less, I guess, risk off currencies like the dollar, the yen, the Swiss franc that tend to rise in market fear. The opposite happens when the market's rising. So today we're actually seeing the stock market see a nice move to the upside. And this seems to be a little bit promising. Take a look at this with me on the US 30, and we can actually see that if we draw a simple trend line here to the downside, we have actually broken out of that structure. So we put in lower highs, lower highs, lower highs, but then bam, just recently as of Friday and today, we've got a nice start to the run up on the US 30. Now, again, the US 30 is a nice gauge, in my opinion, of looking at, market sentiment. Is the market fearful? Is the market optimistic, et cetera, right? And that's kind of where we're at with this. So if I take a look at US 30, the question is this thing a buy? Well, it kind of depends your trading style, but I would say we're off to a very nice start. We put in a higher high, put in a higher low, and we've been pushing up. So for me, if I'm looking at this on a trend following perspective, looks optimistic for buys on retests. So if I go ahead and I draw in some levels here, for example, some support here, if you get a retest of that area, the Dow or the US 30 might actually be an interesting one to pick up on the retracement. We are teasing the idea of breaking through these highs that we put in on the open Asian session here in the foreign exchange market. We got started and shot to the upside, actually a bit of a gap to the open there on the indices. And now the futures, looking pretty good before the US stock market actually opens. So possibly we could get that momentum on the break, right? Or on the opening bell, which could offer some opportunities like this. But let's say we pull back. There might be also an opportunity to try and pick it up around that 50% level at the 30,750 mark. Might be an interesting spot to see. By the way, thank you everybody for tuning in. We got a couple people in the chat, so welcome. Thank you for tuning in. By the way, comment what you would like me to take a look at. I'd be happy to take some requests and see what we can look at. We've got a couple things on the radar today. We're going to take a look at gold. We're going to take a look at some of the US indices, and then probably stick around on some of the currency pairs as well. But please feel free to drop what you would like me to look at, and I'll do my best to get to as many as I can. So yeah, we got gold. We got a lot of people wanting gold, so I'm happy to do that. We'll do that one in just a moment. Gold is definitely, I feel like gold is one of the most popular pairs. And I bet you that if you look at a lot of the brokerages, I know from personal experience that when I look at, like average, like what's traded on brokerages, Gold is a popular one. So is the euro. You've also got GJ, which is actually a pretty popular currency pair. So always interesting to see. Christian says, I've been watching all your videos for Forex. I'm enjoying and learning so far. Thanks, Nick. Thanks, Christian, for tuning in. And thanks to everybody who's hanging out. CAD yen, US 30, GBP pairs, gold, CAD Swiss. Cool. Thank you for being here, guys. So let me also say this. So I'm going to take a look at some assets. We'll take a look at gold next here. I do like the indices on a pullback. I'll tell you that. I like the 50% retracement. That looks interesting to me. Might be a point at which I'm looking to try and pick up some long side action on the US 30. Okay, so let's take a look at gold. We'll pull up gold here for a second. And I'd like to start on the daily chart, actually, just from a higher time frame view. Let's see. So moving averages, downtrend still very much intact when looking at gold until this downtrend really starts to crack, until we start seeing, breaks of the highs and higher lows and higher highs, that sort of thing. Until we start seeing that pattern start to the upside, the bearish case for gold to me is still very strong. So when I'm looking at gold, you may ask, well, what's the move here today? Well, if I'm looking at volatility as well, we jumped back up here into the middle of the, these, by the way, these are Donchian channels. They're similar to Bollinger Bands. They're just a measurement of volatility. I have this scan that I just added to my charts recently called the volatility indicators. It shows me the average true range, and it gives me these Donchian channels that just give me an idea of, normal price action move. And as we start to reach extremes, it can be kind of interesting to pay attention to it. So for example, like when price reaches the extreme standard deviation levels, in fact, actually, I'll pull this up so you can see what I'm looking at in terms of inputs. So it's a 10 length on the thing, and then you get the upper lower, all that sort of stuff. So feel free to add that to your chart if that's something you're interested in. And of course, we stick to the price action for actual execution, but I like to look at like indicators to measure volatility and things like that. So gold, pretty volatile recently. We tagged the lows and have since retraced a little bit. The question is, as we narrow in, we're still in a overall downward trend. So as gold starts to try and poke up to the upside, to me, this is more territory where I'm looking to try and pick up sells. So I'll show you, if we draw a fib from the swing high to the swing low, we tapped into that 38.2% retracement and clearly got a pretty good response from sellers. So you can see price came up into this area and has since seen some nice rejection. So this thing might be headed lower. It might not actually retest much higher than that. This actually might have been the high before we sink back down to the lows. If you're a trend follower, then we're probably expecting that pretty soon. Now, if I'm looking at the 38.2, if you caught that trade, then perhaps you're in something like that. You got your stops, depending on how loose or tight, depending on if you're a swing trader or a day trader. Let's just say you're more on the swing trading side. Maybe you put that stop above the 50%. This, just a swing back to the lows, gives you a 2.5 to 1. That's not a bad risk reward in my opinion. Of course, you've got a nice start here to gold, and maybe you're trying to pick it up intraday. So let's say, yes, we've got that rejection off the 38.2, but you didn't actually catch that swing there. There might be an opportunity to try and pick it up on the lower time frames on a retest. It did swing up here. So maybe if that comes back into play, if that consolidation kind of comes back in here, might be an opportunity to look for more downside. Of course, this is my opinion. And as always with my videos, streams, whatever, whenever you see me, I'm not here to give you signals and to tell you how to triple your account in a week. My goal is to give you my thought process on trades that I'm looking at with a conservative trading approach. I'm not here to flip accounts in a week. That is not, for me, it's like, if you want to trade long-term, you've got to employ really practical and conservative methodologies to stay in the game. The thing a lot of times people focus on, and we could do this a whole rant on this, but I'll keep it really brief. A lot of times people focus on how much money they can make in trading, when in reality, the question is, how can you protect the money that you bring to the table better, right? If you're focused on constantly trying to make a lot of money from your trading very quickly, trying to double a $100 account really quickly, you're more likely just gambling and jumping in front of freight trains to try and make some money, which I think is a tough game to play. Anyways, so like if we take that higher time frame for walking it down, we're now looking at let's take a look at the 30-minute chart. We have that higher time frame downtrend. We saw some big rejection. So if you're looking for the retest, maybe the retest comes in around 1650, which we've already sort of seen. So we might have missed it. But if it does give us a second chance, maybe you're looking at this and you're saying, hey, you know what? I can tighten up my stops here just above this little swing high, right? I don't hate it. I like this idea a lot. So, and then in that case, if that were to really crumble, now you're looking at like a 5-to-1. This is why sometimes, the cool thing about being more on the shorter time frame is you can take a higher time frame approach. You can be like, okay, well, gold, like I've analyzed, I think it's bearish. It looks, strong downward trend on the higher time frames. We've stepped down lower, and now we picked an entry point on the lower time frames. We're looking at the 30-minute chart. We've got a stop loss. To me, that makes sense. You've got consolidation and structure here. If that were to break out, I think I'm out of that trade. So I'd be out of that idea. Hopefully, does that make sense? Let me know. Type yes in the chat if what I just sort of walked through on gold made sense to you. It'll help me out if you just give me some feedback. Type yes in the chat. Thank you, by the way, everybody who's been here. I want to remind you really quick that on Wednesday, if you're part of the Eightcap crew, last week we did a whole presentation on risk management, and we had a lot of fun with it. Really, really important stuff. I think a lot of people came away with some good, I hope they came away with some good learned lessons out of that. And at the end of the webinar, I mentioned that I'm going to be doing a follow-up webinar today on Wednesday, an in-depth coaching webinar on backtesting, how to actually truly backtest your methods to know that on a probabilistic standpoint, you're likely employing a method that's actually going to result in you making a profit over time, not you just losing your entire account over time, right? So on Wednesday, we're going to be doing that webinar. We dropped a link here in the chat. Let me see. Can we see that in my stream? We cannot. So let me go ahead and do this really quick, guys. Give me 1 second. I'm going to drop the link. I got the text here from Eightcap. We got the inside scoop. I'm copying it, and I'm going to put it on my stream right now. So if you're watching from my channel, I just dropped a link. If you guys would like to join the webinar, let me see. So what you need to do is you need to join to be a part of the Eightcap crew. Sorry, I'm just doing multiple things. So I'm going to drop a link to check out Eightcap. And if you become an Eightcap patron or a member of their awesome community, then you could join me on that webinar. It's going to be great. So make sure to join us if you haven't already. We've got that on Wednesday. We're going to be doing an in-depth webinar on back testing. So please join us if you haven't already. It's going to be great. And for those of you guys who are already in the Eightcap crew, I look forward to speaking with you guys more, following up on our last conversation. So again, we're going to be doing an in-depth coaching call on backtesting on Wednesday, and I invite you guys all to join if you're part of the Eightcap crew. I just dropped a link to check out Eightcap. Please feel free to click that link, check them out for yourself, and there you go. Okay, so let's see. Let's see. What next? So we talked about gold here a little bit. Let's see what else we can find. So there's our thoughts on gold, looking for retest sells. Now, if I take a look at the EdgeFinder, I want to see what's going on here in terms of score chart summary. So look at this. Some of the US 30s up there on the buy list. So looking kind of intriguing there. If you take a look at some of the sell biased stuff, we've got gold, which matches what we just discussed. AUDUSD. Let's take a look at the Aussie. See what's going on with Aussie dollar here to see what's been happening there. So AUDUSD, probably a similar component to our idea on gold. We've had a lot of dollar strength recently, and actually coming in here on the open, it seems like, is it the dollar going up today? Let's look. DXY. So DXY. A little bit of dollar strength coming in. It seems like the dollar has actually found a little bit of a support level here around the 112 mark. Looking at DXY. Now, if we take a look at AUDUSD, how is that reacting this morning? Well, here's your 4-hour chart view. You can actually see price tapped up into this level of resistance, and the downtrend seems to still want to continue. So, of course, the Aussie dollar is that risk-on asset. It tends to be to a degree, when the stock market rallies, tends to actually benefit. So actually, is the stock market coming down here? No, actually, it's still going up. So interesting. It seems like the Aussie dollar specifically is getting a little bit of weakness, maybe alongside that dollar strength. So questionable scenario where we have the dollar rising and we have the stock market rising here this morning. So I would say probably one of them has to crack. We'll see which one it ends up being, but not always, because there is not 100% correlation between, or inverse correlation between the dollar and the stock market. But take a look at this. We retested that 61.8% retracement. We tapped into a level of resistance, and the Aussie dollar is off to the races here. So I would say Aussie dollar looks like it's probably headed back down to lows if we're just kind of trend following here. Goal is just to kind of continue to the downside. Taking a look at our moving averages here, you can see overall a nice downward trend. Volatility still at a really healthy level. What this is showing you, by the way, the average true range, it gives you how many pips on average per bar a particular asset is moving. So right now what we can see is that when we look at AUDUSD, we have an average pip range of about 47 pips. Let's call it 45 pips every 4-hour bar. So kind of an interesting stat, and that's up, right? So as volatility increases, I like it more, right? So when an asset is moving a lot more, to me, it's nice because you can get a lot more opportunities, right? So volatility can be scary. It can also be an excellent thing. If you're a trend follower and you pick up a trade and volatility picks up and you start going in your direction, very quickly you can get some excellent risk reward trading opportunities. So anyways, Aussie dollar to me looks like it's probably continuing lower. Now, if you missed that, of course, that initial trade, there might still be something on the lower time frames to try and pick it up on the retest. Seems like it already tried once here this morning, but let's highlight this area one more time. So now we have our higher time frame perspective. Let's draw a fib just to see what this shows. So if we draw our fibs, look at this. The fib came in so clean this morning. Swing high, swing low, came back up to the 38.2 and dropped very quickly. So if it retests up into that area, maybe you get a second chance here. Anywhere between, honestly, that 38.2 and the 50%, you've got a nice, look at this bar right here, right? This green bar, you had a big shoot to the upside and that entire bar got engulfed on the very next candle. So that kind of shows you that area, right? A lot of sell pressure in that area, at least recently. Igor requested EURAUD from the Eightcap side of things. Happy to take a look at EURAUD in just a moment here for you. And yeah, so we'll do that. And we'll do that one next. And it'll be a nice follow-up to Aussie dollar. So anyways, yeah, I think if you get a retest up into these zones, right, that 50%, 38.2, somewhere in there, if I was to look at this and I was to take a trade, I think being sort of aggressive could pay off. And I don't mean aggressive in terms of position sizing. I mean aggressive in, entry point. Let's say we just get that swing one more time up to that 38.2. I would put my stops. I think I have to be out of that trade if it breaks that 50%. If it breaks above that consolidation, I'm out of that trade for a loss. Now, if it continues lower, this is where you get those great risk reward trade opportunities. I'd be looking to swing back down to the previous low, if not beyond. I like to trail stop. So if you guys are familiar with my trading style, I wouldn't actually look to strictly take profit here. What I'd be looking to do is, as this thing continues to march lower, right? Let's just assume I'm in this trade. If we put in a lower high, right? I would take the stop loss from this trade and move it and just follow price and let the market tell me when it's time to get out. So maybe I take my stop loss there and then I move it here after this breaks the lows again. Okay, cool. Right. And then when this market truly reverses and breaks out, that's where I'll take my profit. I hope that makes sense, but that's just, there's a lot to unpack there, and perhaps in a future webinar or video. I have videos on that if you'd like to look up Trader Nick trailing stops on YouTube. You can see how I like to trail my stop loss. It's not a magical formula. It is actually what it does is if you trail stops, your win rate starts to be worse. As a trailing stop trader, like your win rate is pretty bad. Like I think my win rate, including like small profits and like break-even trades, is around 50-50. But in terms of like actual like good size trade wins relative to small losses, it's like 35-40%, which is really not great, right? But again, it's all context, because even if you just win 30, 35, 40% of your trades, if you catch huge winners when you're right and small losses when you're wrong, it's not necessarily mentally comfortable because nobody likes to lose frequently, but for my results, it's what works best for me. Okay, so We had a request from Igor for EURAUD, so I'll be pulling that one up here and we'll take a look at that pair. So if I look at EURAUD, this is interesting because the euro is catching a little bit of a bid right now. And I'm not the biggest euro bull, but to be fair, I'm not really a big Aussie bull either. So I think from just a technical standpoint, we're just very much in a range right now. So you have this area here. So consolidation across the top and support across the bottom. So to me, this would be just a simple, because I don't have a strong bias one way or the other, I probably personally wouldn't trade it. Like I like to have trades that are trending well and something that I have a strong bias on. But if I'm looking at this, yes, you have resistance here. So if we're just going to stay in the range, you'd probably expect this thing to roll over a little bit, but I'd be keen on watching for the breakout. If you get the break and retest, there might be an opportunity to go long. I would say, you know, if I'm short in this area, I'd probably have to get stopped out above the highs, right? That's just how I would approach it. I'd be saying, hey, you know what, if this breaks out, that's my cue to say, I'm wrong, I'm out, got to get out of there, right? And if it ranges, you know, you might actually get a nice swing back to the low side. So again, if you listen to my rants long enough, then what you'll kind of hear from me is like, I don't know with certainty what the market is going to do next. And newsflash, nobody actually does. Nobody is 100% confident on what the market's going to do next, unless you're like, I don't know, like John D. Rockefeller from the grave, like calling all the shots and you have like $1 trillion to move the markets. But none of us are that. So we don't have absolute certainty on what's going to happen next in markets, right? So as the little guy, we have to be reactive. So when I take a trade, you know, like let's say I do think the Euro Aussie is a short bias. It doesn't really matter what your bias is. Like whatever your trade is, I talk about this often, and I talked about this extensively in our recent I talked about this in our recent webinar last week on Wednesday. We discussed this in risk management. Whatever your opinion is, it really doesn't matter as long as you have the risk management in practice. You could be wrong and you're just going to risk small. You're not going to take massive losses. It's so important that the first thing you as a professional trader will have to do is acknowledge what you're going to do when you're losing. Lots of stuff, lots of requests on the pound. What's happening with the pound? Let's see. GBPUSD. So we just had some news break, I think. Some people are saying in the chat, breaking, I apologize, I don't know this guy's name correctly, but Rishi Sunak became UK PM, set up your GBP trading. Very, very interesting. So lots of requests for GBP stuff. Igor, you're welcome. Igor says, thank you for the Euro Aussie idea. No problem. Thank you for tuning in. So a little bit of volatility here coming in. Any news on who will be the new British Prime Minister? I think we just had some. I don't want to say for sure because I'm not 100% sure on it. But apparently we do have some news there. Hi, Nick. Can you explain a bit of your fundamental analysis using your A1 platform? Rajneel, thank you very much for the question. So I have a background in software engineering. And when I came to trading, my goal was never to just do anything 100% manual, because just like everybody else, I have a busy schedule. So I use software to help me find the trades that I take. In fact, nowadays, I don't take any trades without software to help me find it. And that's personal preference, but it's also, for me, I found myself being a lot more consistent with having a tool like this. This is the A1 EdgeFinder. It's our software tool. I have a company. We build software tools for traders. I'm in an office right now. We have a couple people who are on the development and marketing side of it. And we've built this tool from the ground up. This tool, basically, what it does is it takes into account all sorts of different things: interest rates, unemployment, inflation, GDP, trend reading, and it compares assets to one another. Right. So for example, if we're looking at the pound versus the euro, we can compare in those categories. Well, what's seasonality telling us? What does it do on average during the month of October? In the trend category, how well is it trending right now? GDP numbers, who has the faster GDP growth? Inflation, who has lower inflation, right? Unemployment, who has better employment numbers? So we compare all these notes and it generates an output for us. So I don't have to go manually read 1,000 articles a day to pick up on these things. I just have that right in front of me. So that's what I use the EdgeFinder for. And then it filters it basically by score. And then I get an idea propped right up in front of me every single day. To me, I will never go back. I will never trade 100% manually again, because if you do this as long as I have, I've been trading for 5-6 years now. every second counts in my life, right? Like I have a very busy schedule, as I'm sure many of you guys do. You have a job, you have family, some of you might have kids, right? You have like all these things going on. For me, it's like anything I can take off my plate to do manually. I don't want to have to go research and find these numbers site by site, article by article, but I do like to employ a level of fundamental analysis because I think it's really important. Why does GBP have a good inflation there, the highest with 10.1? So GBP, take a look at this. So we can compare, let's go look at GBPUSD, for example. When we look at the inflation numbers comparing the UK to the US, for example, if we take a look at that, what we can see here, give it a second to load, is that in the inflation category, we have a -1. What that means is that we go over to here, inflation, comparing the numbers, 10.1% is higher in the UK. 8.2% is obviously lower in the US. Which currency would you rather hold? The currency that's got a higher rate of inflation, it's losing value faster, or the one that's losing value slower? Neither case is great, but of course, you'd probably want to be long the one that has a lower rate of inflation. So in that category by itself, we favor the US dollar. Now, of course, this is one category of the many metrics that we study with the EdgeFinder. So again, I don't want to spend all the stream time today on the EdgeFinder, but it is a tool that we use to analyze the markets. So when we look at the pound dollar, we're still sort of mixed right now. It's sort of entered into consolidation. So going back to the EdgeFinder, like we have a neutral bias, right? And that's because we don't have a lot of things right now stacked purely in favor of one direction. So as we look at that, we can kind of see we have consolidation going on. We have highs and we have lows. For me, if I'm looking at the pound USD, there's not a whole lot for me to trade here on this right now. I think I'd be looking for, if I had to trade it, I'd be looking for breakouts, either direction, right? So if it breaks to the upside, we get momentum pick up on the UK or on the pound, maybe some positive news for the UK. Again, we have breaking news, so keep an eye on that. Or if we don't, if we see the exact opposite, if we see a sinking pound again, there might be opportunities to take it short against the dollar. So right now, though, there's no trade, too neutral for me, not enough. I need that strong conviction, one direction, and with lots of bias before I can pick up trades. The thing is, for me, it's like if I'm going to take trades, I need to know like the factors that I look for are all lined up. Otherwise, there's nothing for me to do here. So there's no trade for me on GBPUSD. Going back to the score chart summary, this is where I can pull it up and do sort of an overview look. So we've got AUDNZD. This is actually coming in as a strong sell, which is an interesting pair. Let's go look at that one just for a second. AUDNZD. So look at this beautiful downtrend. You've got your moving averages looking really, really strong there. Downward push overall. Volatility is still relatively healthy. Got a nice little amount of push there and actually reaching a nice little high here. So the recent high on the Donchian channels. So if we take a look at this, you're probably looking at, in my opinion, a decent risk to reward here on going shorting Aussie, buying New Zealand dollars. So we take a look at this, draw fibs from here to here, and you're up at that 50% retracement level. That looks pretty healthy. I mean, if I'm looking at this thing from just a trend following perspective, above that 61.8, that's only 30 pips, by the way. That's a 30 pip stop loss. And then you're looking for a continuation down of 80 pips, just down to the previous low. That's not bad. So I kind of like that setup, just a continuation play on AUDNZD. So that might actually be a trade I think about taking myself. Can Eightcap users get a discount on the EdgeFinder? Rajnil, great question, my friend. Actually, I'm working on it. I'm working on it for you guys. I know a great individual at Eightcap who's been helping me out with that idea. And the short answer, I can't guarantee anything, but we're working on it. Hopefully going into next month, we're trying to work out something where Eightcap continues to sponsor the A1 Trading and Trader Nick streams. Myself, that's weird to speak in third person, but my streams and my company's other channel, A1 Trading, we're hoping to keep them on as a sponsor. And if that happens, we might be able to work out something out where Eightcap members can get access to the EdgeFinder for some discounted rate or something. So stay tuned, Rajneil. But in the meantime, you can check out more information about it at a1trading.com and read up on the tool if it's something you're interested in getting yourself. And what I'll do here is just for people who are watching on my stream, Trader Nick right now, we're streaming on 2 different places. I'm just going to drop a link in case you have interest in checking out the EdgeFinder. You can also request a free trial. I'll show you guys this here. So if you go to this link, I'm going to drop in my chat. I just dropped it right there in the message as well. If you click that link, you can go check it out yourself and possibly even request a free trial if that's something you're interested in. So there you go. There's the EdgeFinder and our website. Feel free to browse around as much as you'd like. All right, guys, that's going to wrap up the stream for me. Thank you very much for tuning in. I appreciate everybody who hung out with me. And we will see you guys back next time. Have a great rest of your day and catch you on Wednesday for the Eightcap people. We're going to do our webinar and we'll see you back then. All right. Catch you guys later.